Eric Muathe with Muathe.com. Let's take a look at Tesla's daily chart and see what we can learn from this. If somebody was looking for, let's say, the next swing trade, I'll show you two things to consider on the daily chart. And there are two lines of resistance. If you take the RSI top lines on the daily, we can see we've come here. We seem to have stalled here with a double top on the daily chart. That's a problem short term. Now, if you consider this period here, which gave us a short-term pullback in terms of a swing trade. Now, take that information and draw a line. And what we can see here is when we come to this line and get stalled, for example, take a look at this resistance here, which gave us the highs right there. And we did have some type of a shallow pullback after that. And now we've come back, we've hit that same line, and we are stalling. So from a swing trade perspective, what the chart is trying to tell us in terms of the daily chart is more than likely the next meaningful swing trade here is down. And what one can do is use the recent daily closing high as a stop level, and that is at 341.01, which goes back to this daily close right there. So if it moves above that and you've taken a short position, that would be a logical place to get stopped out. Otherwise, the daily chart is suggesting here that the next meaningful direction in terms of a swing trade is down. By the way, the big picture here is if you take a look at all data monthly, the key to the magnitude of any downside action is whether it is above 69.1 or below it. If it is above 69.1, don't expect any type of a major pullback. But if it cracks down and is showing the RSI on the monthly trading below 69.1, that would be a sign of potentially even a major high. There's one other footnote, and I think it's a biggie. If you take a look at this break, we can actually draw that break right there. There was a trend break in 2014 off the highs here, and that was a major high at the time, because you see we go into a major drop over a couple of years there. So if you draw a line from there, which is exactly around where it is trading, which actually happens to be at about 69.1. So this red line here, if the market confirms this as resistance, and especially if this resistance on the monthly is with uniform action, chances are we are looking at major highs. So rejection here with uniform action on the RSI might be a problem for the stock. The last time we had that type of action was this rejection period here, which is this high. And of course, we know that after that we had a drop of meaningful size. So the key here long term in terms of month to month is whether it holds above 69.1. Failure to hold above 69.1 on the monthly is definitely a bearish sign. We shall see how it goes. Otherwise, if it breaks out on the daily above 3.41, chances are it is still above 69.1 on the RSI and is poised to stay at current levels, if not higher. We'll see how it goes from a learning perspective. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESCS. Woo!